problem today, and start talking about journal entries a bit more, talking about doing the financial statements a bit more. Okay, so this needs to be good though. Okay, so you got to do a good job. Anyway, all right. So let's start with this stuff that we've got up here. Okay, let's start with it again. Let's review. What's a synonym for left? Everybody knows this. What's a synonym for right? Use it. Okay, please use it. Please use that you know this. Okay. There are 5 kinds of accounts. 3 go on the balance sheet. What are they? There's your balance sheet. 2 go on the income statement. Okay. Now, there are only 5 types of accounts, but there are hundreds of thousands of things that are assets, liabilities. There's only a few that are equity. We only have a few accounts. Whatever you sell could be a revenue account. How many different products can companies have? How many products does GE have? Thousands. What do you bet they have an account for each one, for the revenues for each one? Of course, because they want to know how much they sold of each one. Don't you suppose? In fact, they have more than one account for each one. For each location where they're selling each one of those, they have an account. They have thousands of revenue accounts. Okay? Got the idea? And expense accounts, they're even more, right? Probably have fewer products than you do expenses, don't you think? Hopefully you have more dollars of sales, though, if you have dollars of expenses, right? It'd be good. That's what we call it, positive net income, right? By the way, what if you don't have a net income? What could happen? You could have a net loss. Net income is when the revenues exceed the expenses. Guess what a net loss is? Expenses exceed the revenues. This is easy, isn't it? Okay, there's just nothing to it. Let's put debits and credits in here. Assets on the left, so we increase them with and we reduce them with credits. Liabilities and equity on the right, so we increase them with credits and reduce them with absolutely. Okay, revenues are a subset of equity. I'm increasing equity as I earn my revenue, so they must be what? They got to be credits. If I put too much in one, how would I fix it? Debit. That's it. Okay. Expenses have to be the opposite, and they're reducing my equity, right? Because they're reducing my income, they're reducing my wealth, reducing my equity. They must be what? Debits. If I put too much in, what do? Credit. Okay? And then, of course, net income is a credit. Net loss would be a debit. You know, if your expenses are bigger than your revenues, you'd be debit, wouldn't it? Everybody knows this. Okay? So as we go along and you're lost, I'll be making fun of you, and I'll be putting this up on the board and saying, geez, would you just use the model, please? Right? If you don't know how to record the transaction, you do not know what happened. That's it. And if you don't know what happened after you did it, I really don't know if I want you to be one of my managers. You don't know what you did? Really? Right? Years ago, I was working with clients, and I worked for a CPA firm. And basically, that was it. What'd you do? I'm like, huh? What would you do? Which is basically what you get and what you give up. You exchange things. And you know what? People won't know. Well, we bought the company. Well, what'd you get? The company. Well, yeah, but what'd the company have you bought? I don't know. We got them. Right? What'd you give them? Well, I'm not quite sure. What? Really? Yeah. And then you figure it out. Right? So, of course they know. Just can't remember, can't figure it all out. It's a big negotiation. Right? So millions of dollars going both ways, right? By the way, by definition, when you go buy a car, you and I went down to buy my wife's new, whatever it's going to be, Volvo or Mercedes or something. The cheapest Mercedes or second cheapest Volvo, whatever. Yeah, anyway. Or something. But she really wants a BMW because she wants all-wheel drive. That's now your $66,000 or something to get all-wheel drive. Because we like to go to snow country. So I'll say anyway, but I'll like it too. Thank you, sir. Everybody got their quiz back? Anyway, if we go down, let's say the car costs $30,000. Right? Okay, let's see. Yeah, okay. It's about a $30,000 sticker. And I pay $30,000, and you pay $25,000. Because you're a good negotiator, I'm not. Okay? How much is yours worth? $25,000. Which you paid for. How much is mine worth? $30,000. Now, as soon as we drive it off the lot, they're both worth $15,000, right? They're both worth exactly exactly the same amount when we drive them off the lot. I just lost more than you did. Everybody got the picture of this thing? Well, what you pay for it is what it's worth, by definition. Okay? So my dad did this with me. It's really it is a great piece of advice. He was mean. He was hard to work for. He had a little construction company, and I got to dig ditches for him, totally, haul lumber and stuff. So we worked. Yeah, we worked. His deal was we had to work harder than everybody else who worked for him because we were his sons, my brother and I, and he didn't want anybody to think there was nepotism going on. So all the carpenters would protect us from him because he was constantly yelling at us. I'm not kidding. I was terrified of that. Now he's got Alzheimer's. I get to see him up now. I just not kidding. Yeah. So, well, I probably could, but I don't think I would. Yeah. Anyway, yeah. He became a really nice old man, but he was just a total ass the rest of his life. But anyway, he was. But he always did really good work. He got the best materials, he got the best carpenters, and they delivered really good stuff. And all these carpenters really like to work for him. You know why? Because he got the best materials, right? And they built really good stuff. But back in the day when they were still craftsmen, you know. Yeah. Anyway, built really nice properties. But anyway, his deal was whatever you agree to work for, you give 100% of yourself. If you were willing, I was working for $1 an hour, right? When minimum wage was $1.25, I was in farm labor. So, you know, so now it'd be like, I don't know, $6 an hour maybe, right? I was working, or 5 or something. I was working for that money when I was a junior in high school or a sophomore in high school, whatever. I lied and said I was 16 when I was 15, so probably a sophomore. Anyway, no integrity there, right? You couldn't work your 16. Anyway, so I'm out there working on this farm, and my dad says, I know they're not paying you very well, but you earn it. You give them 100% of what you have. And if you do, you won't make that very long. You don't make more. Do that throughout your career, you guys. If you have to take a job that you think is beneath you, how about if you graduate and get a job as a waiter? Become the manager of the restaurant. How do you do that? Bust your ass. You make them a lot of money. You make them a lot of money, and you'll be teaching other people how to be waiters before you know it. It's true. It just happens every time. I have never asked for promotion in my life, ever. You just can't avoid them. I've never asked for a raise in my life. Why bother? I give it to you anyway, so you won't leave. Okay? Here's what Steve had to say, right? It's true. It's not all about the money either. You can have more fun. It is more fun to make the decisions than to have somebody else tell you what the decision is. It just is. It's a kick. It's more fun to sit in a meeting where you plan what's going to happen than it is to find out what they planned and then try to implement it. Although implementing is kind of fun too. It's okay. I'm a drone working here with you guys, right? You know, it's okay. It's fine. I like the job. It's good. I have no responsibility now. I kind of like that in a way. Okay. Anyway, so go back to this model, right? And use it. That's all I ask of you, and you can do anything. Okay? So it's written over here. We don't need to keep this up. That's a disadvantage of this little system. Things go away, don't they? Let's do problem 2.5 on page 89. Let's take a look at that. This is Dell Inc.'s balance sheet. You guys know who Dell is? They make computers. Ever seen a Dell computer in your life? Yeah. Okay. Anyway. They suck. You're right, and the company is well, compared to the competitors, they're not doing a very good job. They used to be really good. They had really neat models. They were the first one where you could contact them and they'd send a computer straight to you. You didn't have to go to a store for it. That was Dell's big thing. Now you can do that with anybody, right? Huh? I think what happened to them was they didn't make as good a computers as their competitors. You hear his phrase? They suck, right? Yeah, the computers just. And they're not awful. They're okay. You know, that they're just not state of the art stuff. Okay. They keep trying. Anyway, so they've got a few problems, and you can even see their problems in this financial statement. Believe it or not, we'll get to that. Okay. But this is their balance sheet. It's a little bit condensed. But you know what? Everybody's balance sheet fits on 1 or 2 pages. You might have the assets on 1 page, and then a page next to it, so you open up like a book, you know. You open up and you can see 2 pages at the same time. That one side would be the assets, the other side would be the liabilities and equity. Nobody has a balance sheet longer than that, okay? Now, they might have thousands of assets and thousands of liabilities, right, guys? And a few equity accounts, they can condense them. They put them all together into groupings, right? And that's what they've done here. They've condensed it down even more so it fits on 1 page for purpose of the problem, right? But this is a real balance sheet. Look what it says up there at the top. Company name, balance sheet at a specific date. You don't say for the year ended. You know why? On the income statement, on the cash flow statement, we're going to say for the year ended. That's because we only show 1 year at a time. You'll only show the revenues for this year, right? You only show the expenses for this year. You only show the net income for this year. You want to know what the net income is this year, right? So you just do 1 year at a time. Although you might show several columns. For a publicly held company, they've got 3 columns, right? This year, last year, and the year before that, okay? Publicly held, I mean like a company that's traded on an organized stock exchange, FCC regulated company, okay? Securities Exchange Commission regulated. So big companies. Smaller companies would probably only show 2 years, okay? Privately held companies, where the owners are owning the stock enough. It's not being traded on an exchange. That's what a privately held company is. And you're going to read about all this stuff and have read about some of it already. Anyway, so they're just showing 1 year here too, which is not real realistic. But anyway, and then it says at. Nobody says at. You don't put the word at or as up. You just put the date. Okay? So I'm sure on their statement they just said the date. By the way, this is February 3rd, not December 31st. Your year can be any date you want. Okay? Why would they use February 3rd? Any company that sells things where there's a lot of sales around Christmas time, which, believe it or not, Dell would be one of those, right? So would Apple, right? Imagine what Apple sells at Christmas, right? That's one of their competitors, right? Anyway, who's doing real well, okay? By the way, everybody thought Apple was going to go under. Doesn't that sound funny to you guys? Can you imagine your life without Apple? How many of you have something Apple made on you? Yeah. Nobody ever would have thought that happened. That would happen. Their computers just, they were really good. Macintosh, you ever use a Macintosh? They're really good. They're just way too expensive. And IBM just cleaned their clock, basically, and then clones of IBM, right? What do they call them? PCs. PCs wiped out the Macs. Because what Apple tried to do was make theirs different than everybody else's so nobody could compete with them. And what happened? They couldn't compete with anybody else. They even put all the Apple computers in schools, didn't they? Right? Thinking that when you graduated from high school, you'd keep using Apple. But then what happened? You came to college and everybody's on a PC, so what do you need? A PC. When you go to work, what do they have? PCs. They don't have Macintoshes. So where does Apple make their money? This route, right? Communication devices, I guess. Okay. And iPads and iPods. My 4-year-old granddaughters now have computers and phones on the computer so I can do FaceTime with them. You guys are obsolete, aren't you? They're 4. My grandson contacted me yesterday. I was down at St. George's, the community center on the west side. I'm helping with a little bit of accounting. And so, community service stuff. So I'm down there and at 6 o'clock and he called me and it was time to practice. I'm supposed to learn how to do Minecrafter with him. You guys know what that is? He is so good. He's 6. Yeah, he's 6. I have no, never. I just can't do it. There's no way. He just cleans my clock. So we are watching each other. Actually, he's watching me. I can't tell where the hell he is. But anyway, we are on the same screen together. He's out in Pewee Valley and I'm here up the street, right? No kidding. And he can watch me at the same time. Is this cool or what? I don't know how it works. I don't have a clue. That's cool. He knows. Yeah, he's got it. So he says, it's time to practice, Papa. Yeah, this is great. Now I got my grandson contacted. That's what I should be doing with you guys, right? You send me these little messages. You know, are you practicing? Yeah. That's the way you guys will do it. You'll be high tech, maybe. Now you're already behind them. Okay, anyway. So what we want to do in this problem is we want to create the next balance sheet, okay? By the way, why are there balances here? Why aren't they all zeros like they were in our earlier problem? It's the opening statement, which means they've been in business for a while, right? At least 1 year, I guess, if this is their year end. Oh, I was going to say the year end could be any date, okay? I didn't say it, didn't finish today. If you have a big Christmas season, would you want your year end to be December 31st? Or would you rather wait maybe a month or 2? That's what the deal is here, okay? I never got to that part. But anyway, your year end could be any day you want. You can have 52 week years, and every once in a while do a 53-week one so that all the years have the same number of days, right? You can do 13-month years if you want, right? That'd be okay. No problem. You know, each statement is 4 weeks then. You do 13 of them in a year. Right? Yeah, it'd be okay. You can do anything you want with these statements. So don't look necessarily for just the year end. Notice it's in dollars and millions. It's a big company. How much cash is that? 13,852,000,000. That's what that is. Okay? It's a lot of cash, isn't it? Okay, so you kind of have to get your head around that. Okay, so yeah, and it's a good thing that he didn't put all 6 extra zeros on there, huh? It's annoying to try to read it. Okay, so that's definitely common. Okay, and then so on the next page we have a whole bunch of transactions, a few at least, and we're going to take those transactions and try and figure out what the new balance is. So I just want you to get the idea of how this works. Now this is all computerized, right? The computer actually prepares the journal entry most of the time. Okay. But you have to program the computer to do the journal entry and to do it right. Or we can make it ourselves, right? Okay, into the computer. Then the computer automatically posts. What post means is what? Copy it. Copy the journal entry into the general ledger account. And we're going to use T accounts to represent the general ledger account here, okay? So the computer is adding up the debits and subtracting the credits, or you know what, they can add up the credits and subtract the debits if they want. But anyway, they're getting the balance, debit or credit, in each one of the accounts. And then you know what? So the computer always makes sure the debits equal the credits too, okay? And then you know what it does? We've got the computer programmed to actually prepare the financial statement. So here's the deal. The transactions get recorded by the computer for the most part, and then we'll make adjusting ones to correct mistakes the computer made or somebody made input into the computer, right? Okay? We'll adjust all those accounts, and then the computer automatically does the financial statement. Let me ask you this. So all balance sheet, income statement, cash flow statement just come out, right? And they look really pretty. How many of you have ever written a paper for English in Word, for an English class in Word, and it looks gorgeous, and then you hand it to the professor, and they put a big red mark across it and say, this is garbage, and hand it back to you. It looks beautiful, but it's garbage, right? Have you ever done this? Maybe you didn't get to that point. Maybe you read it yourself and realized it's garbage. I better write something instead of just make it look pretty. I don't care how pretty something looks. Everything looks pretty now, right? Everything looks really good. These statements can look really good and be absolutely wrong. And you know what? Millions and millions of transactions in Dell Computer. What do you bet the statements are wrong when the computer prints them the first time? So it's harder than doing it by hand. If you were doing it by hand, you could determine each transaction whether you recorded it right or not, couldn't you? You know what a computer will do? If you program it properly, it'll do the right thing every single time. Unless it's a power failure or something, right? Unless there's a glitch in the computer program, and then it'll be a mistake once in a while. Or you know what? If you program it wrong, it'll do it wrong every single time. It's hilarious. The statement will come out, and you'll look at that number is impossible, right? Couldn't possibly have that number. I got negative cash, and it's huge, and I know we've got cash in the bank, right? Because the transactions are all recorded across, okay? So it's harder. So imagine what an accountant would now do, or a finance person would now do. You get this printed financial statement, you have to ask yourself, is it right or wrong? And if it's wrong, where is it wrong and why? Okay? It's tougher than if you're preparing it yourself. Okay? So everybody says, oh, well, why do I need to know accounting? The computer's going to do it anyway. You know, it's like, you have to know how to read and write. Computers know how to read and write now. It doesn't do you much good if you can read and write, does it? Okay? Okay. So let's do transactions here. Let's set ourselves up. We'll set ourselves up with a bunch of key counts. Okay? So here we go. I think I would keep the asset accounts separate from the liability accounts, separate from the equity accounts. And in this problem, we're not going to have revenues and expenses, but in the next problem, we will. Okay? Next time we do it, we'll do an income statement too. Okay? So fine. The office is trying to give you a little piece at a time. Obviously, I throw it all at you once. But anyway, I would have separate accounts for each of these, of course. And in real life, you'd have a computer record for each one, right? Thousands of them. So what accounts do we have? Let's set up T accounts for these things, representing general ledger accounts. What's the first one they have on their balance sheet? I think it's cash, isn't it? So you'd write down cash. What's the balance of cash? Come on, let's go. Yeah, just read the numbers to me. Yeah, I'm not going to put all the billings down there. What is it?
13,852.
Okay, and typically when you're giving people numbers, a really good thing to do is to say 13852, right? Because otherwise they all merge together, and if we have zeros in there, we tend to round them, you know, the way we say numbers. So if you're talking with somebody on the phone, or like this, right, cross a room or something, if you're right next to them, it's no big deal, right? You show them. But if you're reading it to somebody, good idea just say the numbers. Okay, it's not bad. Okay, I don't care really, but it's helpful. Okay, then what else we got? I left room in cash too because we're going to do a whole bunch of debits, credits to cash, aren't we? What else do we have? That's an asset, right? Why did I put it? Why did I put the number on the left? It's a debit. I don't have to remember it's a debit. I did that. It's a debit. It's on the left. No, no kidding. Okay, what else we got? The second one?
Short-term investments.
Short-term investments.
966.
$966 million. Okay, what else we got?
Receivables and other assets.
Okay, receivables and other assets. Accounts receivable, I guess. Maybe notes receivable. I don't know what they call receivables. How much?
9803.
9803. Wow. $9,803,000,000. What else they got?
Inventories.
Inventory. How much is that?
1404.
Okay. What else do they have?
Other
current assets, I guess. How do I know they're current? Because they're listed under current assets. Okay, how much?
342.
342. 3,423,000,000 or something. Okay, now, somebody tell me what a current asset is. Somebody tell me what a current asset is versus a non-current asset. You guys read about this, right?
A current asset is something that you're going to be getting cash for in the near future.
Okay, it's going to convert to cash, or you're going to receive cash, or use it up, or something, right, within a year. Okay? It's a current asset. What's a non-current one?
Something you want to use next year.
More than a year. That's it. Everybody in the world knows that, okay? Every business person does. Now you do too. It's valuable to know that. Okay? It's that simple. How about liabilities? Current liability.
Stuff to be paid off within a year.
Going to be paid within a year. Non-current? More than a year. Wow, this is hard to determine, isn't it? Okay? It's real simple. Okay. All right. We have more assets? Yeah. What's the next one? Come on, you guys. Wake up.
Property, plant.
You guys did good on a quiz, so now you're asleep today, right? Leave me alone. I showed up on a Friday, and a whole bunch of people skipped. I should get extra credit for that. Well, you will if you actually learn something. Come on, you guys. Okay? Property, plant, and equipment?
2124.
2124. Okay. What else we got?
Long-term investment.
Long-term investments. How much is that? Come on, how much?
My book's wrong, so.
Yeah.
403.
What is it?
3404.
3404. Thank you. You have the old edition. Okay, what else we got?
Non-current assets.
Other non-current assets, and you know, in real life, of course, other non-current. Okay, in real life, we'd have what? More accounts for these things. How big is that number? It's huge, isn't it? How much is it?
9557.
9557. They grouped a whole bunch of accounts. Does that make sense? You'd never have a category called other with that much in it. Yeah.
So we can abbreviate the account titles as you want.
Oh yeah. You can abbreviate as long as you tell what they are. I tell what they are. We're good. Okay. Don't use INV for inventory and INV for investment both, like I just probably did. Right? Okay. Although I put short-term and long-term on it, so it's pretty obvious, I guess. We probably should do something else on inventory to be able to tell them apart. Yeah. Makes sense. Okay. Is that all the assets? Yeah, let's do liabilities. And they're all debits, right? Of course. Okay. What else we got? Accounts payable. That's on open account, right? I owe my vendors, right? People who sell me things, right? How much? Let's go. 11656. 11,656,000,000, right? That's how much they owe. Okay. What else we got? Short-term obligations, probably short-term notes payable, right? They grouped a number of things. How much is that? 10345. Boy, there's a bunch in there too, huh? What else they got? Come on. Yeah, the total is just the total of them all. Yeah, long-term liabilities. So this is probably long-term notes payable, things like that. How much is that? 13
615.
13 billion. Okay, so you're 15 million. What else do we have?
That's total.
Okay, what do we have in equity?
Common stock,
Common stock, how much is it?
34.
What this is, you guys, is the par value of the stock, and it's a real low par value, so that's not really how much was invested in stock. The amount that was invested in stock is going to be common stock plus additional paid-in capital. We'll get to that stuff later. So that one's 34. What's additional paid-in capital in common stock?
12153.
Again, I'm sorry.
12153.
Okay. So what was really paid for the stock is those two added together. Make sense? That's how much was invested. So it's over a $12 billion investment in the company. Then what do they have? Retained earnings? How much is retained earnings?
28236.
2, 3.
28236.
Okay, got it. 28236. $28 billion, right? What is that the summation of, everybody? All their net incomes, year after year after year after year. What did they start with in retained earnings the first day they started their business? Zero. What have they done since then? They earn net income after net income after net income after net income. And they also, in more recent history, they had loss after loss after loss after loss. They also paid some dividends that, I don't know if they ever did, but they might have. Okay, the authors here say they don't pay them right now. But they may have paid dividends too. So for any company, their ending retained earnings is all the net incomes for all the years they've been in business, right? Added up, less all the net losses, less all the dividends. And we make journal entries for this, right? You know what cash is? It's all the cash that ever came in, less all the cash that ever went out. That's what I have in my wallet, you know? The sum total of the cash in my wallet is all the cash I ever put in there, or my wife did, less all the cash she ever took out of it, right? Usually not much in there, okay? All right, doesn't need to be much in there. There's credit cards. It's all right. Okay, there's one other account, isn't there, in equity? And this is other comprehensive income. They say other equity. This is called other comprehensive income. And this is where we can see that these guys are in big trouble. It's a big debit. How much is it?
31506.
How much?
31506.
31506. $31 billion in the hole. I'm not exactly sure what they did, but they might have invested in a whole bunch of companies and they turned out to be worthless. I think that's probably what it is. And they lost the money. And the way we account for it doesn't run through the income statement. So they think it's a temporary thing. So we'll get to that in one of our later chapters. It's the appendix. Oh, by the way, did you notice in the syllabus I'm assigning an appendix? What do we always think if you see an appendix? It probably isn't very important, right? It's an appendix. I have no idea why they put this in the appendix. It's really, really important, and it's hard. Maybe they put it in because it's hard and they thought you guys were stupid and couldn't do it, so maybe principal students shouldn't do it. How many of you want to go through life not understanding why that $31 billion is there? Which is, by the way, almost as big as their total equity. This is 40 billion, right? And they've lost 31 of it, and it didn't run through the income statement. Their equity's really only 9 billion, huh? What do you think? What would you think if you were a shareholder? Whoa, we're in trouble. We're in big trouble. Their assets and their liabilities are almost the same size, aren't they? They're in trouble, okay? And it never ran through the income statement because of the way we account for this nonsense, right? Okay? So important to understand what other comprehensive income is, you think? And we'll get to it, okay? We'll get there, okay? How to account for all this stuff. All right, anyway. By the way, you guys did really good on this first quiz. It was easy because how could I make it not easy if you're paying attention, right? And you're working. Are they going to get progressively more difficult? I don't know. I don't think the one we're going to do last is hard either, because I know how, right? You might not think it's hard either. Have you met any students that took this class before that think it was an easy class? I do give age, you guys. Talk to any one of them. Now, what are they going to tell you? Wasn't bad. I got an A. Right? How'd they get there? They're not genius. They just work their ass off, right? Any of you met Grant yet? I actually gave that Blake an A, I think. A minus, something like that. He doesn't know anything, does he? You work, yeah, you work with him. You think he knows anything? Not much, right? Man, kind of slow fellow. Yeah, he'll be all right. Well, you met Steve Cape. Kind of a doofus. Come on. Right? brilliant. Such a word. Okay, guys, let's do journal entries. Let's write some journal entries. What's the first one? Journal entries are debits and credits, right? Put stuff on the left, put stuff on the right. What's the first one? Let's go. We're not going to be able to leave until noon, you guys. It's terrible. Hurry up. Come on.
Borrow $50 from banks due in 2 years.
Okay, it's really 50 million, but yeah, borrow 50. What do we get? Cash, which is a asset. We have more, so we debit it. Yeah. So what? And what do you want to credit, everybody? We borrowed it.
Liability.
Liability. What kind of liability?
Non-current.
Non-current liability, because we're going to pay it in when?
2 years.
2 years, yeah. So it's probably a long-term note payable. What do you bet? So it'd probably be a long-term note payable of some kind, which is all going to be, that's included in what? You're right. It's going to be long-term liabilities, huh? So now let's post this. We wrote the journal entry. See the debits on the left, credits on the right? Okay? I don't have to write asset or liability next to them because I know they're assets and liabilities. And I don't have to write debit or credit down because I know the one on the left's a debit and the one on the right's a credit. You don't have to mess with that. Nobody does. Okay? So you can put those, you can put debit and credit on top of the columns if you want, right? Some people do, but you don't need it. Okay. Let's put the debit to cash in here. There's 50. We now have 50 more cash, right? So we put it down. So now I don't have 13,852,000,000 cash. I have 13,902,000,000. Everybody agree? That's it. We constantly keep track of where we're at. Okay, and then long-term notes payable needs to credit. You better make sure you record both your debit and your credit, or you'll be out of balance, right? We just changed the balance sheet, didn't we? Everybody agree? Let's keep going. What's the second entry? What's the second entry? You don't have a, what's the second entry here? Second gentleman here. What's the second entry there?
$1,100 to abilities to sign a 6-month note.
Okay, so affiliated companies are people that we have an ownership interest in. They're affiliates of ours. Okay? So we probably have a separate account for that because we want to convey to our shareholders that it's a related party that owes us money because it's kind of like owing yourself money, right? So you know, tell people about that, right? But if they're stable, they're going to pay us. Okay? If they got the money, they'll pay us. Right? And what did I give them? Cash, yeah. Okay, so what do you want? You can do the cash first if you want because it's easy, right? Just make sure you do your debits first, then your credits, so leave room for the debit if you do it that way. Okay? So don't you want to credit cash because cash went out? Or was it 300? What do you want to debit for 300? What is it? Note receivable. And I'd say note receivable, and I'd probably put the word affiliate on it, by the way, so I can tell it's an affiliate. But anyway, where does that go? Either in receivables or in short-term investments or other current assets. One of those, right? If receivables is notes receivable and accounts receivable, it can go in there. So let's put it in there. That's fine. So we got 300 going in there. Everybody got the idea? We got 300 coming out of cash. This is very mechanical. What's the hard part of this? Knowing what the journal entry is, right? That's the only thing that's difficult. What's the third one?
Purchase additional investments for $13,000 cash.
A long-term or short-term? How long are you going to hold them?
Also says that 1/5 were long-term and the rest were short.
Oh, okay. So let's do the cash part first. What happens to cash? Goes down? They say what? It's an asset, and what do we do to it if it went down? Credit it, always. Same as the last one. What was it, 13 million? 13,000, which is 13 billion? 13 billion, right? Okay. And what do you want to debit? Some of it is short-term investments, and some of it is what? Long-term investments. They are both assets. We're increasing both of them. What was it, 1/5 was long-term? How much is that?
10,000.
Long-term or short-term, 10,400?
Or short-term.
Short-term is 10.4, isn't it? Be careful, right? Obviously. And then long-term is? 2.6. Everybody see what happened here? Nothing to it, right? Let's post it. Short-term investments go up by 10.4. What the deal is they have 13 billion of cash laying around and they wanted to invest some of it and get some earnings out of it. Cash in a bank doesn't do you any good, right? You don't earn anything with it. So 10.4 more short-term investments and then 2.6 more long-term investments. Got the idea? This is easy. Okay, and I assigned a bunch of problems to do this kind of stuff. Credit cash 13. Got it? Work as many problems as you can stomach, you guys, so you know what you're doing. Okay, what's the next one? Make sure I post all the debits and credits as we go, by the way. If I don't post all the debits and credits, what will happen? I won't be in balance, right? So you got to be careful, I guess. Okay, what's the next one? Somebody?
For
property, plant, and equipment paid $875 in cash, $1410 with additional bank loan.
All right, so what did we get? An asset named property, plant, and equipment, that's land, building, equipment, right? What's the total of those two? That's what we got. Asset, more, right? Debited. How much? Somebody? Oh, you guys are slow. How much? 875 is the total? Oh, but I paid out cash, didn't I? Wouldn't you credit cash because you paid out cash, 875? You can do it that way if you want. And then what else did we do? We borrowed, so let's say note what? Note payable, short-term or long-term? Yeah, so it's a long-term liability, it's going to be called in their, on their accounts, right? But it'd really be notes payable long-term or long-term notes payable. How much was that? I asked you what the total was of the equipment that we bought or plant or whatever it is, right? What is it? It's $875 million plus $1,410,000,000, right?
2285.
Yeah. That's how much assets we got. This is easy, isn't it, guys? Okay, then we'll post it. Property, plant, and equipment goes up by 2285. Right? We're going to reduce cash by 875. There's lots of transactions in cash, of course. There'd be millions in a company like this. Okay, note payable long term. There's millions, but they're all real similar transactions, aren't they? We just keep going. Okay? So our long-term liabilities went up by 1410. Okay? What else do we have? What's the next transaction? Next exchange. What happened, guys? Come on. Anybody? Let's go, let's go.
Issued 1,000 additional shares of stock for $400 in cash.
Okay, now what happens here is we get cash, 400 million, right? And really what we do is we would credit common stock, see that common stock account there? We credit that for the par value of it, and then we credit additional paid-in capital for any excess, right? And the par's probably 1,000 of that, maybe. Got the idea? Okay, and the rest is going to be additional paid-in capital. But for now, we'll just call it contributed capital. Put it all into common stock is fine. Okay, so I got 400 more cash, 400 million. Okay, and I got 400 more common stock. You like it? We'll do it like that. Okay? What's next? You guys have books out there?
Can I use yours?
Yeah.
Tired of the silence.
You guys don't want to carry your books around because you're on the web.
We haven't used it the last couple days. We'll be using
Oh, I didn't use it, so I'm going to quit carrying it.
Yeah,
That's good. Come to the business meeting without the materials. Yeah, that's good. Don't worry about it. I'll be fine. You know, I actually go to meetings sometimes without a pencil, without a paper to write on, and I'm like, oh. You get used to everything being electronic. I can't even take any notes. Pull my phone out, and they all think I'm on Facebook. I probably am. My grandkids' pictures are out there. You know, you invite me to a boring meeting, I'm going to look at my grandkids. Yeah. So.
How often do we use books in class?
Whenever I feel like it. You know.
Enjoy the silence then.
Are you an athlete? You look like you're in good shape. Did you used to be an athlete in high school or something? Yeah. So, do you want to maintain your shape? Carry your book around. All of them. Come on. Besides, if you want to get a bad back, carrying your backpack with all those. Yeah. So wait till intermediate with books like this. It's just a monster. You carry it around for a year and a half. Okay, anyway. What does it say? Go ahead.
Which one are we on?
Yeah.
God.
Purchased a patent for 3,000 cash.
We what?
Purchased a patent.
Is he on the wrong problem?
Sold short-term investments costing 11,000 for 11,000 cash.
Okay, we sold investments that cost 11,000 for 11,000. You think that's ever going to happen? Exactly what we paid for? I suppose it could happen. But usually you'll have a gain or a loss. Besides revenues and expenses, and you've already read about this in chapter 3, there's revenues and expenses, but there are also gains and losses. Now here's the deal. Revenues and expenses are from selling the product that you're in business to sell. So if you think about UPS, how do they earn revenues? Delivering product for people, right? That's what they do. And handling inventory and stuff. They call it logistics, right? So logistics. So that's what they do to earn revenues, and then they have a whole bunch of expenses associated with earning those revenues, don't they? What a gain or loss would be is, let's say UPS decides to sell one of their airplanes or one of their trucks. They're not in business to sell airplanes and trucks. They use it for a long time, and then they sell it when it's real old, right? It's used up. For their purposes, used up. They sell it. When they sell it, they'll have a gain or a loss. Those things are peripheral. There's no cost of goods sold associated with it. It's not revenues and cost of goods sold. It's just you get rid of the asset and you have a gain or loss. In this one, on purpose, they gave you no gain or loss because we're not supposed to know about an income statement yet in this chapter, right? Chapter 2. Next time, chapter 3, we'll do it. Okay? So next time we meet, we will. Trying to give you a little tiny bit at a time. That's not the way I approach it, is it? I kind of dump a whole bunch on you right at the beginning. Keep our out of doing that. Your time's too valuable to give you a little spoonful at a time. Right? You want too much at a time. That's better. The little sister always said that. My parents would say, don't give her too much. She'd, no, I want too much. Yeah, so she still does. Yeah. Okay, anyway, good for her. So, what do you want to do with this? What they do? What they get?
10,000 cash.
Yeah.
11,000 cash.
Yeah. 11 billion. Okay, and credit what? Short-term investments. You know what happened? And it's the 11 billion, right? So I increased one asset and reduced the other. You guys agree with that? Okay, so what happened was they parked that cash in short-term investments, and then they took it back out, didn't they? Everybody agree with that? 11 came out, it was 11, right?
Yeah.
And it goes back into cash. So now they have cash to use for whatever they use it for. Okay, got the idea? So they earned some money with the short-term investment for them. Is there another one?
Yeah. So they paid 60 in dividends.
Okay, they said this company doesn't really pay dividends. That's because they're almost bankrupt. Okay, they're not really, but they're not in great shape. But they're not really bankrupt. Yeah, they're going to pretend they paid some dividends so they can show you a dividend. How does a dividend work? Is a dividend an expense in generating revenues? No. It's a distribution of profit to the owners, right, guys? So they have less cash because they paid the dividend. Everybody agree with that? And what do they have also less of? You already know this. You did it for me on the quiz.
Retained earnings.
You got less retained earnings, and this is how it gets there. What you do is you debit, I guess I'll put it over here, you debit retained earnings. How much was it?
60.
60 million, okay? And you credit what? Cash. By the way, if you only declared the dividend, what you could do is debit retained earnings and credit dividends payable. And then later when you pay it, you could debit dividends payable and credit cash. We're going to get there. Okay, it makes sense, doesn't it? Right? You could set it up as a liability and then pay it later, couldn't you? Okay? Is that the last one? It is, isn't it? Okay, what I want you to do, let's post that. Retained earnings goes down by 60, right? And cash goes down by 60. Okay, what I want you to do is get the total for each of these. Go ahead and do it. Get the total for each of these, for each account. I can do that one. I can do that one. Pretty good, huh? Get the total for this. I can do that one. I can do that one. I might even be able to do this one. So somebody do cash. You three right there? You have a calculator between the three of you? Yeah. Okay, do cash. Okay. You guys come to class without calculators too? You know, okay, here's the deal. When I'm working problems, if you sit and watch me, you will not remember how to do it. If you do it while I do it, you will. Have you ever ridden in a car someplace where you go on a fairly long trip and you make lots and lots of turns and then try to go do it yourself? Versus if you drove there yourself? What happens if you drive there yourself? Do you remember how to get there the next time you go? Of course you do, because you did it and you look at everything. If you were a passenger in the back seat, you looked out the window and looked around and chatted with your friends and looked at your Facebook on your phone or whatever, twitted people or whatever you do, yeah, anyway, tweet people, right? You know, you do, don't you? And you wouldn't have a clue of how to get there. That's the trouble with this Garmin stuff. I don't know where I'm going anymore without Garmin. You know, you go out in the countryside and you lose your Garmin and now you're lost, right? Because we don't go anywhere anymore. Do it yourself as we're going. Also, I'm going to stop sometimes. We're going to say, let's take the next 15 minutes to work that problem. You don't have a calculator and you don't have a book. Are you kidding me? What are you going to do? Wait. Sit there and learn nothing. Okay? All right, so total them. Come on. Somebody tell me what the total cash is. Some of you do cash. Let's find out what the total of the other ones are. This one's 434. I can do that. You're going to use these numbers. The balance in common stock is 1234. Additional paid in capital 12. This is 60 less, so this is 28,176 there. That's 31,506. Somebody do total liabilities for me too. I can't do that one. It's too big. Way beyond my skills. 6004, I think here. Okay, and by the way, you should have all this written down on your paper, right? So, you know, you're not doing it from up on the screen, you're doing it yourself. So what's cash? Really? Cash?
I didn't see the 11,000.
Cash! I'm adding 13 plus 50 plus 40, 400 plus 11. Just subtracting these, they're credits.
I didn't see the 11.
Debit and credit. What is it?
I got 11,067.
11067? Anybody else get that?
Yeah.
Excellent. Okay. All right, what do we have for short-term investments? 966 plus 104 less 11. Isn't that what it is? How much is that? What? 366.
Yeah.
Okay, I can see it better than that. What's 9803 and 1360?
11,103. 11,113.
113.
Yeah.
That's 1360, isn't it?
Oh, is it?
63.
It's like a 10.
Okay. All right, did we do them all? Oh, no, it's long-term liabilities. 14 what? 075? Is that it? All right, now what do we want to make sure of? Our debits equal our credits, because we want to know what? How much is assets, how much is liabilities, and how much is equity. So really quickly, add up the assets. You should have them on your piece of paper in front of you. If you don't, what are you doing? You know, here's the other thing. When you're in a really boring class like this, you know how I stayed awake at night? I can remember a history class when I was a freshman. I'll never forget it. The most boring thing I've ever seen in my life. The guy come in and he'd sit down a piece of paper, right? Many sheets of paper. We're all crumpled up. He'd had them for about 50 years. And he read them to us. I'm not kidding you. And then he'd flip the page. You ever had a teacher like this? Flip the page and then flip the next one and flip the next one, flip the next one. And I think, why don't you just give us these papers and we'll read them? All right? What a waste of time. I wrote down every word he said. Why? So I did not go to sleep. So this is a real boring class. It's just horrible. I'm awful at this stuff. Write down what I'm saying if you can. If I'm talking really fast and you're learning a whole bunch and your head's really into it, don't write it down. It's in the book anyway. If you start daydreaming and going away someplace else, start writing stuff down. If you're going to use it later, like you would this solution to this problem, right? Yeah, the answers are in the solutions manual, but they don't look quite like what I do. They do it a little bit different a lot of times. I'd have them both written down. Plus, writing it down will help you learn it. You guys do know about this learning theory stuff, right? Hearing it, saying it, writing it down, all those different things can really help you. You can read your book to yourself out loud if you want. I don't personally like doing that. I don't like listening to myself, so bad enough having to do it for a living. Okay, what do we get for total assets? Somebody who's got it. Did you get a number for total assets?
Oh, no, I was going to say long-term liability is 15,075.
Oh, it's 15,075. You know what? If we don't add things up right, what will happen when we figure out our debits and credits in total? We'll be out of balance, and we go back and fix it. So you can work fast, right? Somebody tell me what total assets are. Add up those assets. Somebody tell me what total liabilities is, and somebody tell me what equity is. Equity is strange because it's 434 plus 12,153 plus 28,176 less 31,506 because they have lost a whole bunch of money. And we'll learn about what's going on there later. Investments they made in other companies, probably. And they wrote them all down. Okay? It's an artifact of how we account for it. Come on, you guys. What are they? What's total assets, total liability, total equity? What do you want to make sure of? You want to make sure the assets equal the liabilities plus the equity. Come on. Somebody got it? You guys can't use calculators?
Oh, number.
Okay, what'd you get for assets?
48193.
48193. Somebody get liabilities? Come on, you guys. Come on. It's a few numbers. Come on. What's the liabilities? Accounts payable plus short-term obligations plus long-term liabilities. Is that it? How much? 37076. And what's equity? Equity's awful, isn't it? What happened? Their liabilities are almost as big as their assets. What happened, you guys? They lost that 31 billion over here, right? On something. So 434 plus 12153 plus 28176 less 31506, what do you get? 9 something, isn't it? By the way, you're going to get fast at using a calculator, you're going to get fast at thinking, you're going to get fast at doing analytics. It's going to really help you. Math classes, statistics, right? Calculus, statistics, all your business classes, right? Whole lot of environments. It really pays off. So build the skills. Come on, guys. What is it, 9? They didn't equal?
I didn't, but I could mess up a lot.
What's equity? Only one person totaled them in the whole class. Is that right? Nobody else has a calculator. 7257?
For equity.
434 plus 12153 plus 28176 less 31506. It is 7 what?
725.
I got 9257.
I like 9257 better. 9257 plus 37076 should be 48193. It's not, is it?
No.
That's because you guys can't add. Okay, I'll let you go. Right? So do this, right? Do it. Work some of these problems. And then, of course, your debit's happy for your credit. We added up. Something was wrong. Either that or we added subtracted wrong. Yeah.
Honestly, it's strong really, really. So if I choose just to go over all these quizzes, so I will go over the practice problems.
No, you need to read the chapter thoroughly and carefully. Once. I would read it first. I would read it first, get an idea what's going on, then I do all the problems. If you do the problems, you'll find you need to go back to the chapter and look at certain pages. Okay. That's the way to do it. So you kind of read chapter more than once, but not all the way through.
Right, no, that's not.
But to pick up all the theory, the ideas, how things work, reading it all the way through carefully, they're only about 50 pages long. I'll just take an hour, sit down and read it.
I'm down with it.
Yeah, and then start with the problem.
Okay.
And then do the quizzes. Then do the quizzes after you've done the homework. That's the order to go.
Okay, for sure.
And then when you get what you'll find is when you get ready for the test, you'll just go back to the cue problem. You'll flip through the book and look at things that you might not remember, right?
Okay.
Page after page. And then you'll look at a few of the problems you did and you'll work a few more and make sure you got it solid. And then you'll really count on it.
I appreciate it.
That's how you do it. Okay, works good. The women think they don't take it. You got this guy in about 15 minutes, right?
Really?
Yeah.
Whoa. I got it last night.
Oh, but you could have.
You don't like it?
Yeah, if you get relaxed, you can get done in 15 minutes.
Oh, yeah, you know what?
Yeah. So imagine maybe 3 times the amount of work. Here's the thing. Always show your homework as fast as you possibly can where you are understanding. Right? You don't blow through it, but you work quickly. Everything you do through your entire career, work fast. Oh, yeah. Yeah, you're in the class now.